essentially, now as investment banks, they are regulated by the Securities and Exchange Commission, and they are, because they do not raise deposits from small investors or through banks, but they raise them through capital markets, they are largely free to do with those funds what they want. Now they will be, as commercial banks, regulated by the Federal Reserve with very strict guidelines as to how money is raised, what that money can be used for, and what it can't be used for. So that if they continue doing investment banking type of business, which one would expect they will, they cannot use these deposits. If you go in and you put your money in Goldman Sachs Bank, they're not going to be able to take that and trade it as if they were a giant hedge fund. So there will be very strict guidelines there. And also, commercial banks are, by and large, much more strictly regulated than are investment banks. One thing to note is that while this is obviously a huge story on Wall Street in and of itself, the fact of the matter is there's been a lot of crossover between investment banks and commercial banks for many years. You see, of course, that the largest commercial banks in the United States, J.P. Morgan Chase, Bank of America, have investment banks within them. Likewise, Goldman Sachs has had a commercial bank subsidiary with $20 billion in deposits for several years as well. So it's not as if this is a complete personality change for these banks, but from their point of view, it is a very significant change.